Hi guys, welcome to another video by Optionables. I'm Saket and in this video we are going to review the trades taken on 20th of July 2021. So believe it or not, in some videos before I have told that sometimes we do end up using technical analysis or we do use charts where we actually based our entire day on chart. So now there is a story behind why suddenly all of a sudden out of nowhere we use technical analysis on Tuesday, and I'm going to tell you the same, right? So what happened was morning I was not able to take the trade on my laptop because I was outside, and hence I started trading on my phone. So on phone, I had placed order, same short straddle order. I had sold both calls as well as put. I had sold 34,700 calls as well as puts. So now what happened? I usually keep a 75% stop loss, which all of you are aware. What I ended up doing was, instead of keeping 75% for stop loss for calls as well as puts, I kept stop loss 2 times for puts alone. So what exactly happened was, as the market came crashing down here, right? So as the market fell here, my stop loss got triggered for puts leg. But it is not just that, the stop loss got triggered for put leg and extra quantity got purchased as well. We had sold 34,700 calls as well as puts, and I had sold 1000 quantity. The stop loss was kept around 320 rupees, and instead of it just hitting the stop loss, it actually ended buying 1000 more quantity because I had placed the stop loss 2 times. So what is the problem? The problem is, if I had seen it right away, then there was absolutely no problem. But I didn't even realize that because I was, as I told you, I was not following the markets continuously because I was outside. By the time I realized it, the market had already come up. And this put leg, which triggered at 320 rupees, was now trading somewhere around 240 rupees. So I am seeing, why is my loss increasing more and more? So then I realized, oh shit, I have extra 1000 quantity of put leg. So now the thing is, it has already come from 320 to 240, and this is a trade which I didn't even intend to take. I was not even looking forward to buy this at 320, right? So now the thing is, if I knew that I had actually ended up purchasing extra quantity at 320, I would have tried to cut it off at 320 or 315, losing 5 points or 10 points, whatever it is. But the thing is, now this is trading at 240 where I have lost 80 points, which means I have lost 80,000 from this particular thing. So now should I actually end up cutting my leg and book a 80,000 loss for a trade which I never intended to take? So the answer is, maybe you might consider some more things, some more factors before you actually end up booking this 80k loss, and that was technical analysis. So this is where we used technical analysis and we actually were able to come out with a profit. So again, in this video I'm not going to explain short straddles, short strangles and adjustments, but in this video, since it's little different, I'm going to show you how actually we did the technical analysis. So the next obvious question, Saket, do you even know technical analysis? Have you ever done it before? So I'm also going to spill out one more secret which very few of you know, or almost none of you know. So to be honest, I didn't start options by doing short straddles or short strangles. If you had seen my journey video, so I was a hardcore technical analyst before. So I used to only look at charts and do equity trading. And since I was so passionate about looking at the markets and taking trades, what I had done was I had started a blog in my 10th standard. And I think when I was in 10th or just about to go to first PU, much before than that, I had started this blog called Stock Market Calls India. I know the name sounds pretty silly because this was the name which I gave in my school days. So I will just show that to you. It's pretty funny. Right, so if you just go to stockmarketcallsindia.blogspot.com, I will attach the link in the description, so you can just check it out. So only few of them actually know about this. Maybe none of them know about this. Here I used to give free intraday calls in Nifty, BankNifty as well as everything. So you can see that last I have updated is September 5th, 2019. So after that, I haven't actually written the blog at all. So, but if you go back to 2016, 17, as well as 18, so you will not find a single day where I have missed giving a call, because I was so passionate about it. So there was continuous streak of 2 years where I hadn't missed for a single day giving the call. So if you open this, it would look something like this. So Nifty is at this level, the resistance is here. So I would also give a stock call every day. So this is a pretty funny thing, which most of you obviously won't know, because hardly few people knew about this blog. Yeah, so this is one more secret which I wanted to spill out. And coming to the chart, so in today's video, rather than the normal straddle, strangles and the adjustments, I will be showing you how we did the technical analysis today, right? So when this particular event occurred where I ended up buying extra quantity at 320, right? So now this is trading at 240. So what is the first thing it comes to my mind? Okay, so I have a put leg which is purchased, which means that my view is now negative. So I obviously didn't want to give away my put leg at a loss of 80,000, because I didn't even intend to purchase that. So I just wanted to see if there's some way I can actually come out of it. So that's the reason I immediately went to charts. So first I went to the daily time frame. So here I wanted to see where is the nearby support coming in, because if it is trading at the support range and if there is a bounce back, then my put leg might actually end up becoming even lesser. So I wanted to know where the support comes in, right? So here I just opened the daily chart to get a broader perspective. So on daily time frame, if I zoom out, so it was quite clear that okay, 34,500 is going to act as a sort of a support, but if that is taken out, we might head towards 34,000. So this was the broad idea which I first understood. Okay, so 34,500, there is going to be some sort of support, but if that is taken out, we can head lower. But the thing is, this is not useful for me since I have the position for intraday. So all I wanted to know was, because if we are not near the support level, since the selling pressure was so much, I can afford to keep the trade for some more time, right? But since we were close to the support level, because when the stop loss got triggered and it had bounced back and we were trading around 35,630, since it was very close to the support level, now I wanted some sort of confirmation, okay, whether this is actually in a downtrend or not. So then what I did, when I look at 1 hour or 2 hour time frame charts, for example, so I am having this trade at 10 o'clock. So this entire thing has happened at 10 o'clock. If I look at 1 hour candle, only one candle is formed. Not even one candle is formed. What perspective am I going to get? Nothing. And if I go 30 minutes candle, so there are 2 candles which are formed and it is not going to help me in any way. So what I did, so since this happened at 10 o'clock, so I am holding this trade intraday, which means that I will have to end my position, cut off my position by end of the day, because I have 1000 quantity and it is at 240. So what I did, I went to a shorter time frame, like 3 minutes. So I opened this chart and I saw, okay, what is actually happening to BankNifty. There is some good amount of sell-off and there is also a bounce back which has happened and the market is trading around this range. So now I was like, okay, and when I actually looked at the market, it was trading around this range and the leg had come to around 240 rupees. So now the idea was, where do I see the nearest resistance? And in the shorter time frame, in the shortest time frame, that is 3 minutes, I saw some resistance coming in around 34,700. So then I was like, okay, if it actually crosses 34,700, then I'm just going to cut off my put leg no matter what is the loss, because it might actually have found some support and it is trying to bounce back. I don't want to take the risk above 34,700. I'll just cut it off. Now what happened? Luckily for me, so this actually didn't cross 34,700, but it actually started coming down. And so now after this happened, what I did, I changed my put leg cutoff to this, that is 34,650, because it had come here, taken some support, bounced back and come here. So now my idea was, the moment as it fell here, the moment it crosses this particular level, I'm just going to cut off my trade. Right, then again it came down, again it came up, and again it went down this way. So now I further shifted it downwards to 34,500, that is right over here. So I was riding this journey throughout, and now my idea was, the moment it breaks 34,500, I am just going to cut off everything. And it did go down, and it finally broke 34,500, and there were two closings above this, and I just cut off all my positions by 1 o'clock. So here actually I had booked half, and here I exited everything. This is how we use technical analysis on Tuesday to pocket some small profits. So we actually, when this particular bounce back happened, we were at a loss of somewhere close to 1,95,000. So we had actually almost hit our limit, but later when the market continued to fall, our put leg actually ended up with profit, so we were able to recover some amount. And not just that, we also did couple of straddle strangles, and towards the end, since there was consolidation, we could gain quite a lot, and we ended with positive of 90k. So again, I will just show you the video quickly. As I told you, I was outside and I couldn't record in the morning, so I'll show you the video quickly. And the idea is, today I just wanted to show you how we did technical analysis. We didn't use any indicators, we just relied on support and resistance. So since we were seeing higher top, higher bottom, we slowly started trialing our stop losses. So here, first we thought, okay, the moment it crosses this, we are going to give. Then it came down, took some support, bounced back and broke this. So we thought, okay, the moment it actually closes above this, we are going to give. Then same thing happened, and when there was another sell-off, we thought, okay, the moment it crosses about this, we are going to give it. So this way we trialed our stop losses, as well as we finally gave it at a profit. So I'm going to show you the trade, quick recording of the trade. So I won't be going in detail about straddles and strangles, because today I wanted to show you more about the technical analysis which we did. So now the question is, Saket, why don't you do technical analysis every day? The thing is, it is actually very bias oriented. So when I actually did this, I personally was expecting, okay, market, please come down, let me get some profits. So, but if I do a straddle, I never expect market to do or behave in the way I want, right? So if I have a negative bias, or if I take a positive bias, I'll be wishing that, okay, market, please come down, market, please come down, let my put leg go to profits. But that is not going to happen when you take a non-directional trade. You never wish for anything. So usually, sometimes you're going to have a lot of false signals, and you end up taking the trade and you wish something happens. So instead of that, even though I have done technical analysis for over 5-7 years, and I have also tried out all indicators, but my personal favorite is non-directional still. So it was quite hard to move on from technical analysis, because if you're doing for so long, even though you don't want it, you try to put it in your trade. So you try to have some bias using technical analysis. But after we started doing non-directional, that's the reason we don't open chart, because it creates a bias in the head. And we don't want that to happen over and over again. Once it's fine, because we got a trade which we didn't even expect. So to come out of it, we wanted to know whether it's good or bad. So that's the reason this time we actually ended up using technical analysis. Meanwhile, you can also go and check out the blog, right? So this is the trade which we had taken, 34,700. You can see that I have booked half, and currently I have 500 quantity of buy leg. Right, so I have booked half. I showed you where exactly I booked half, and I'll just move in the trade. You can see I have 87,000 loss. The loss was somewhere around 1,95,000. So we had lost quite a lot, to be honest. And finally, we slowly end up recovering most of our losses. You can see as we move towards 130, we have come to 29,000 loss, and so on. As we further end up moving ahead, we finally recover all our losses by 2 o'clock. And finally, I come out of all the trades, and I continue to do short straddles as well as short strangles. As I move ahead in the trade, you can see that we are again by 250 also, we are still trading around 75,000. And finally at around 323, we end up booking everything around a positive of 89,500. So that was for a trade which we took on Tuesday. And I'll just fill in the Excel sheet quickly. So 20th of July, we have 90,000 profit and 17,500 as brokerage. So we have one more % to be achieved. So let's see if that is possible in the coming week. So I'll just delete this because we don't have 21, and let's see if this is going to be possible. So that's for today's trade, guys. So once in a while we actually ended up using technical analysis, and hope you guys have liked this trade. And yeah, I'll be catching you soon in tomorrow's trade review. Thank you so much.